I hope you're enjoying the event so far and you've already picked up plenty of useful advice and information. Over the next 30 minutes, you'll hear all about the current self-employed landscape from Danielle Walters, who's a relationship manager at Aldermore. Danielle will provide you with tips to support you in packaging a good self-employed case. After her presentation, she'll beam in live to answer your questions, so do please type anything you want to ask about self-employed mortgage cases in the chat box. Now, over to Danielle.
Morning, Paula. Thanks for having me on here today at the Mortgage Administrators online event. As mentioned, I'm going to be talking to you today around the self-employed landscape and how Aldermore can make self-employed applications nice and easy for you. So without further ado, I'm going to take you through to our presentation. And then once we've done that, as I say, we'll revert back for some questions and answers with Paula. Thanks very much. Okay, so I hope everybody can see the screen. And thanks very much. Sorry about that. So my name's Danielle Walters. I'm your relationship manager for Aldermore in the South East region. And today, as I say, we're going to be talking around self-employed made easy. So we're going to cover off a few bits and pieces throughout the presentation this morning. So we're going to have a look at the challenges faced by self-employed applicants. The last 12 to 18 months has been an unprecedented time for people, both positively and negatively. So we're just going to address a few of those points. And then also how Aldermore can support those self-employed customers so that we can help you place those cases. Then I'm going to talk you through some examples and sort of bring those to life for you. And then ultimately, the key element of all sort of applications is going to be how to package that case and present it to the underwriter to get it through to offer as quick as possible. And then last but not least, we'll take it through to the questions. So the challenges that have been faced by the self-employed over the last 12, 18 months have been phenomenal. I think it's been the hardest time that anybody has experienced, both from a mental health perspective and employment perspective. So what we wanted to kind of focus on really is over in 2018-19, over 5 million people reported themselves as self-employed. So that's a huge population of the UK. Out of that 5 million, only 3.4 of them would have been eligible or met the criteria to claim for government backup or government support. And then by 2020, in October, 2.7 million of those had actually claimed for the government CIS grant support. So again, as you can see, massive amounts of people have been affected. Now, we talk about things happening both positively and negatively. I think the more challenges for those that have been affected negatively, you know, because we have seen a decline in loss and in profits. You know, we because of no work, it could be that there's been limited material supplies from overseas, or we've seen varying income, you know, quite undulating income levels. So we can't confirm sort of sustainability, or a lender can't sort of seek comfort around sustainability. They've seen declining turnover. They've not had the income or the jobs to be able to sort of maintain that. So that's the negative side of things. But there is also a positive. You know, we do see people that have actually benefited from the pandemic in the last 12, 18 months. If you have a look at people, for example, mortgage brokers, how many of those thought back in March last year that it was going to be a real struggle, similar to back in 2008, you know, where there was a big crash. But ultimately, we've been busier than we've ever been in the last 12 months. So ultimately, we've probably seen a positive impact on our income. And then secondly, you've got your couriers. And tell me nobody gets Amazon delivered at least once or twice a day at the moment. So these couriers are absolutely working, you know, their fingers to the bone at the moment. And obviously, again, they're actually getting an increase in profit. So there are two sides to the story. But with Aldermore, what we're going to have a look at is how we can actually help you. So I've got a little bit of a list here, but as you'll see, there's quite a few things that we can help you with. And Aldermore will consider somebody as self-employed, whether they are a sole trader, partner, director of a limited company, and if they are a shareholder of a company with over 25%. We also look at CIS workers on a self-employed basis as well. So just to kind of give you a little bit of an idea, we actively support the self-employed applicant. And we are still considering latest year's income. Now, I think that's a massive, massive advantage in the market as we're standing at the moment. Now, obviously, I will caveat that with it is subject to underwriters' discretion because, as I say, some people have been impacted negatively, others have been impacted positively. And from a lender's perspective and responsible lending, we need to make sure that there is sustainability in that income that we are using. So I'll expand on that a little bit more as we go through. The other thing is if you are a sole trader to limited company, we see a lot of people transition for tax purposes or because the business has grown to that extent. Aldermore will always require 2 years trading before an application can be considered. But the great news is the clock doesn't start again if they go from sole trader to limited company. As long as we can see a continuation of that business throughout, we will take that into consideration. The concept behind that really is just to let the underwriter know that that is the situation. So just pop a little note onto the case to sort of back up that synopsis for us. We take a common sense approach, which I think has been, understood within that previous comment. The other thing is from an affordability perspective, a lot of self-employed applicants will have personal loans in their own name, but for actual business purposes. So, for example, if you're a courier, you're going to have your own, you're going to potentially have taken a loan for a van, to deliver those parcels. Ultimately, Aldermore will allow you will ignore those credit commitments if we can confirm that it is being deducted from within the business and we can see that. So essentially, that will have already been deducted from the income before that has been taken. For a limited company director, Aldermore will actually allow you to choose whether you want to use the salary and dividends, which most high street lenders will obviously work off, which is declared by your SA 302s. But we will also work off of a share of net profit as well. And they don't have to be husband and wife limited company, for example. So say, for example, you own a business with your best friend and you own it 50-50. The good news is Aldermore will still use 50% of that shared profit towards affordability. So you've got that flexibility of using salary and dividends or salary and share of net profit if you're not looking to take all of the money out of the business that year. And I'll give you an example of that as we go through. Now, just to kind of give you a bit of a background as to the accounting periods that we look at. Limited company directors, the accounting period must be within 21 months of the application. And for sole traders or partners, it must be within 24 months of the application. So it's quite a nice big berth to work with. Obviously, following the COVID situation, I will expand on it a little bit more, but we may ask to see an indication of how this year or the year throughout COVID has performed. Now, as you'll see at the bottom there, and it's probably a nice big secret for everyone, is Aldermore will still lend up to 5.5 times income for people that are self-employed, and that does take you right up to the 90% loan to value as well. It will be subject to affordability, and again, I'll expand on that as we go through. So some really, really key points there on how we will support you. We will consider using latest year income if we're comfortable with sustainability. Worst case scenario, we're looking at taking an average of the last 2 years. So we're still trying to maximise that affordability for the client. You've got the ability of using salary and dividends or salary and share of net profit for your limited company directors. And also we take that common sense approach where you might have some business expenses that are held in personal name. So let me take you through and expand on this a little bit more. So Steve is a director and 100% shareholder in his transport company. So might be working for Amazon, you don't know. Anyway, he's decided for tax reasons only to take a small salary and 20k in dividends from his business this year. So most lenders, as you're probably aware, would take his salary and dividends. Now what I've done for you here is illustrated an example of where you would find the information on the company's accounts. Obviously, everybody looks at SA 302s, but to have a better understanding of how that business is established, we use the company accounts. So just to give you an example there, if you have a look highlighted in yellow or orange, you've got the profit for the financial year. Dividends taken of the 20,000 is highlighted in the orange. And then we've also highlighted the retained profits in blue. And then on the other page, you've got the director's salary. So as I say, if we were working off of just salary and dividends, we would be looking at an income of 8,500 plus 20,000 in dividends. But Steve has decided to keep, out of his 49,964, he's decided to keep some of that within the business and retain it. So as you will see there, the retained profit for the year is 2019 to 408,750, taken off of this year's 438,714, which actually means he's retained profits of 29,964. So you can do it that way, or you can take it off of the profit before tax side of things. So I hope that makes sense, just to kind of give you a concept of where you will find the information that you need. Now, if we put that into perspective for you, the usable income for affordability. So option one, which would be generally your high street driven sort of option, would be salary and dividends. So as I mentioned, we're looking at a total income of 28,550. Option two, and with a specialist lender that is able to support a self-employed applicant, we will consider the net profit after tax. So in this scenario, you've got the 8.5 plus the 49,964, which gives us a usable income of 58,514. So it's a massive impact there by using the net profit. Now, to put that into perspective from an affordability calculation, option one, Aldermore will allow up to 5.5 times income cap. Now, this is subject to meeting a benchmark of 50,000. Okay, if you're under that benchmark of 50,000, then the maximum the maximum loan to income that we will offer is 4.5 times. So as you'll see there, 28,550 times 4.5 gives you a maximum loan of 128,475. Now, if we look at option two, because we've gone over that £50,000 benchmark, you will see that we will actually allow you to take 5.5 times loan to income cap, which will mean the total loan amount is increased to 321,827. That's more than 2.5 times in affordability, okay, as a maximum loan. So this is where it's really, really imperative for your brokers and for yourselves to talk to your BDM, have those discussions so that we have a better understanding of how we can maximise that affordability for an applicant. Now, I will stress that the 5.5 and the 4.5 times income is subject to a cap. So that is the most we will ever lend. And then behind that, we will run an affordability calculation. So from that affordability calculation, we will be looking at ONS figures around day-to-day living costs and expenditure. We will also be looking at any credit commitments that the client has, any dependent children. So just bear in mind that that is the maximum. So it's a loan to income cap, but then ultimately subject to affordability. Now, the great news here as well is Aldermore can still assist you, because if you have a number of dependents in the background or credit commitments, unfortunately, you can't sell your children these days. So you're going to have to include them towards the affordability calculation. Therefore, if your affordability figures do drop, Aldermore allow you to use a 5-year fixed. And with a 5-year fix, we can stress the affordability around the pay rate rather than the reversion rate. So it's slightly lower, meaning that we can actually grow that affordability potentially back up to that loan to income cap. But again, please talk to your BDMs or your relationship managers, because they will be able to help you out with that and run through the calculator on our website, which is the same calculator that our underwriters will use. So let's get into the nitty-gritty of it then. So self-employed applicant comes to you and says, right, Danielle, I've used a grant, I've got a bounce back loan, but the good news is my income has increased this year. Well, that's fantastic. And we will still consider these applicants, okay? So if your applicant has taken government support over the last 12, 18 months, then that's absolutely fine. We will take a holistic view. Now, the key to this is we just need to have an understanding of how that client has been impacted. Okay, so as I mentioned at the beginning, it could be negatively, it could be positively. They may not have been impacted at all. Now, as you'll see on the screen there, we have an income declaration form for self-employed applicants that needs completing. Now, that just asks a couple of questions around how the client has been impacted, what industry they're in, have they come up with any sort of different business models to try and combat not being able to get materials or open or work. You know, it's something that we just need to have an understanding of where we are. Now, If there were grants taken, were they needed, or were they just advised to take them because it was a good idea to, and accountants all recommended? Obviously, the newer grants that have been issued have been more assessed rather than just being able to be given out. So again, we just need to understand that. What we also would like to see is a turnover. So where an applicant has been affected, we're going to ask to see the last 3 months bank statements or business bank statements to be able to check that there is a relative turnover in comparison to the profit that they're looking to use. And again, anything that you think that can build that picture for an underwriter is going to be key in this application. So we want to understand the whys, the wheres, and the what fors of that business. Now, if we can see that a business has done consistently well, has consistently grown, we will consider using latest year's figures. Okay. Now, obviously, if they have taken any kind of government support, there may well be that we will use an average. So that will generally be the worst case scenario. And as I say, we just need to have that understanding, and I can't stress enough, as you can probably hear, that we just want to have that story submitted with the application so that when the underwriter picks the case up, they will have a better understanding. But the great news is we will still consider them. We still treat them as a standard applicant. We will still consider up to that 90% loan to value, and we will still consider potentially up to that 5.5 times income cap as well. Now, the next thing is going to be around the packaging of a case. Okay. Now, the key important piece to everything is evidence of income. Now, just to let you know that from an Aldermore perspective, we will always require the SA 302 or tax calculation plus the corresponding tax year overview. These will be required as a mandate. This will be a specific requirement. In addition, if you want to submit the company accounts because we're using net profit, then that would be needed in addition to the tax calculation and tax year overview. So the tax calculation will show the individual's reported income from HMRC and the total tax that's due. And the tax year overview will show the total tax due and how much the individual has paid directly to HMRC. Both need to be submitted hand in hand, not just from an evidence perspective, but there is also an element of fraud prevention in the background as well. So when you're looking at the tax year overview, there are a few things that must be included on that tax year overview to ensure that you are looking at the correct document. So just to kind of give you an understanding there, we have the HMRC logo, the client's name, the UTR, the current tax year that it's showing, and there will also be a statement on the tax year overview that says this is a copy of information held on your official online self-assessment tax account with HMRC. It will also detail how much tax is due and any payments that have been made already. Now, just to kind of give you the heads up from an administration point of view and evidence, there may be some scenarios where the tax year overview doesn't actually match with the tax calculation. And the reason that may be is it may be down to student loan discrepancies. So, for example, when an employer does their tax returns for their employees, they tend to forget about the pence from a payment on the student loan, whereas the tax calculation and tax year overview will show that. Okay, similar to national insurance contributions, there is also scenarios where national insurance contributions for the self-employed can skew the figures and they don't match. Again, just support this with an explanation to the underwriter and we will take that into consideration. The other thing is where there may have been a PAYE tax code changing throughout the year and it hasn't necessarily caught up with the documentation. So, as I say, again, it's something that you can discuss and talk to with Aldermore, but also pick it up with HMRC or the client's accountant and let us know what the issues are. Now, with regards to tax year overviews and tax calculations, there are various softwares out there that we can use to accept this. There are 3 ways of providing us with the information or the evidence that we require. So we can accept the printed tax calc and tax year overview from the HMRC online. Now, please be aware that once you've submitted a tax calculation, it takes up to 72 hours for the documents to be available for print. So just bear that in mind. We can also accept paper copies. Now, obviously, that generally is if you've submitted your tax return on paper. And then last but not least, as I say, there are commercial software systems that allow us to be able to print out those tax computations, tax calculations, etc. Now, where we are looking at somebody that potentially has been affected by COVID, or there has been a varying in income over the last couple of years, it may be required that we want additional income evidence, and that may be from an accountant's reference or the company accounts, just so that we can provide satisfactory verification around what income we are using. Now, in relation to what Aldermore offer in addition to this, is we will offer educational sessions around actually reading company accounts in a bit more detail. So we can talk you through the terminology that's used, the sections of an account where you'll need to sort of get these figures and so forth. But that can be requested via BDM. So the key to everybody's inquiry, how do we get this case packaged as quickly as we can? As I mentioned and have mentioned throughout, the biggest thing I can recommend is talk to your BDM or your RM. We will have the latest updates on policy and criteria, so we can talk to you around sort of any concerns that us as a lender may have in advance, and actually talk to you about the client's situation in a bit more detail. So how have they been affected? What have they done to overcome any sort of issues that they have had? And do they see that there is sustainability, and how can they confirm that that sustainability is going to be available? As mentioned, upload a case note. So following that conversation you've had with your BDM, please ensure that you upload a supplementary note to the case, painting a picture for the underwriter so that when they pick it up, they're not just looking at a page of figures. They actually have a few soft facts behind what the client's intentions are, the reasons why you've used what income you've used, and how we see the future to look for that client. It just helps paint that picture. And as I say, you get a softer approach and a better understanding of the client and application as a whole. As mentioned, with the COVID side of things, please ensure you detail how the client has been affected, how the turnover has been affected, and any anticipated issues going forwards. And then from a lender's perspective, we can assess that and take a little bit more time to understand the client's position. So we do offer you additional support in addition to sort of packaging guides that I can provide for you. But we also have how to get your applications right from day one. So pointing out those key features that we would need to understand and have a better understanding of. Talking about how we can support you against financial crime. So things to look out for on bank statements, pay slips, your tax returns, for example. And then ultimately how we can get you to pass affordability. So as I mentioned earlier, with regards to the 5.5 times and the 4.5 times income cap, we do offer income affordability stretching, potentially by using that 5-year fix to help the clients get onto the ladder. But again, the biggest thing that I can say to you is talk to your BDM, okay? We can arrange with you a more one-to-one session. We can talk to you about case specifics, and obviously we can also arrange sort of additional training and as I say, reading of accounts if required. So hopefully that helps and kind of gives you a general overview of where Aldermore are. Now, I appreciate I've run through that fairly quickly. So what I'm going to do now is open the floor up to some questions, and we'll go from there. So thank you very much for your time, and I look forward to those questions.
Thank you so much for that, Danielle. That was fascinating. Self-employed made simple, maybe not. It doesn't sound that simple, but that was very illuminating. Lots of guidance there. We've got about 5 minutes for questions, and we've got some here from the audience. So to kick off, we have a question from Kerry, who says, a lot of lenders are capping the loan to value for self-employed applicants. Can you see that changing in the future as lenders' confidence in the market increases? Many people have said that COVID has had a good impact on the mortgage market. However, some lenders are penalising self-employed applicants still. So LTVs, which way do you see those going?
So in terms of Aldermore's approach to applicants, we will treat you pretty much the same, whether you're a first-time buyer, a home mover, self-employed, employed. We treat everybody the same as best we can. Obviously, from a self-employed perspective, all I will say is that we will assess the client's situation in greater detail. But in terms of loan to value, I think I mentioned throughout the presentation, we will still allow them to go up to 90% loan to value. potentially, when we bring back our 95, or if we bring back our 95, I should say, we will potentially look to allow self-employed people on that basis. And, we don't restrict that income multiple as well. So it's an income multiple cap. So as I say, the £50,000 is the benchmark to get to that point. And as I say, that's why we're sort of saying to people, if you have got a limited company director, have a look at the share of the net profit as well as just what's showing on the SA 302, because that's a really big indicator of how that business is doing. So the £50,000 benchmark can be built up of sole income or joint income. So they both could be earning 25,000, or one could be earning 40 and the other earning 10. As long as that £50,000 benchmark is hit, ultimately we will give you that 5.5 time loan to income cap, whether you're self-employed or employed. And that is subject to affordability. I will pop that in there as well.
Thanks for that. Somewhat inevitably, we do have the question, when are you going back into the 95% market, please?
How long is a piece of string? I honestly don't know the answer to that at the moment. It is something that is on the agenda for future. But obviously, there's lots and lots of things that we'd like to bring back out. And I think it's just a case of making sure that we can look after our service levels, as well as make sure that we've got the products out there for the market, really. So one thing at a time, I think.
Perfectly fair enough. We've got another question. I think you may have touched on the answer, but perhaps you could spell it out for us. On option 2 for affordability, how do you view previous year's profits, especially if they're a lot lower than this year? Do you still use latest years? You referred to averaging, but perhaps you could spell that out for us.
Yeah, absolutely. So again, with a self-employed applicant, it is reviewed on a case-by-case basis. Okay, so we will have to have a look at what the previous years were. If there has been a significant rise in profit, we just need to have an understanding of why that is. Now, if it's a perfectly reasonable explanation, so for example, you've had a recently set up business and they've had a lot of expenditure in the first year, and then the second year it's really taken off, then there's a plausible reason behind that. Subject to the underwriter's discretion, there is room for using the latest year. However, if a client has been affected by COVID, or has had a massive increase because of the type of business that they're in, so for example your couriers, mortgage brokers, that sort of thing, potentially we may look to use an average, because we can't sort of tar everybody with the same brush. We have to have a better understanding of that applicant, and the key word in all of self-employed applications is sustainability.
Great, thank you. And what are the most common holes you receive in self-employed mortgage applications? Is there any particular documentation which is routinely overlooked, and has this changed during the COVID period?
So there is, the only thing I would say is we tend to get a lot of tax calculations submitted, which is absolutely fantastic, but we need to ensure that that tax year overview is supporting that document. So we have to have the corresponding tax year overview to the last 2 years tax calculations. And the only other thing I would say is that story. I keep mentioning that painting a picture. It's really, really imperative that when an underwriter picks up a case, they're not just looking at a bunch of figures. They actually have an understanding of to why that client is in the position that they're in, why the broker has used the income that they're using, and what the future intentions are of that client. It just helps paint that picture and provide those soft facts, so that the underwriter can underwrite it as a whole case rather than just isolating the figures. We've
heard that a few times this morning, actually. The flesh on the bones are really important. Should people be making videos? Perhaps. No, seriously, though, obviously telling the story is really important to give greater understanding. I think we've only got time for probably one more question, and it's a more general one. Are there any types or sectors of self-employed businesses that you will avoid lending to post-COVID? Given the impact
yeah, that's a tough one, isn't it? I mean, as I say, there are so many different industries that have been affected by COVID, and again, positively and negatively. I would say our underwriters are taking a more cautious approach, and again, going back to painting that picture, very, very good, very must be done, really, for people that are working in the travel industry, leisure, hospitality. The industries that have been heavily affected by the COVID pandemic, really. And again, we just take a more cautious approach. We're not sort of discounting them, because we will consider lending to most self-employed without any issues.
Excellent. Thank you very much. Thank you, Danielle, and thank you for your questions, audience members.
Thank you.
Thanks very much, Danielle.